Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be about reviews, and these are the names that I have covered in past videos, and I will do a quick review on each of them. Next, I will begin covering these names and review them in upcoming videos. I've put in timestamps, so please use it to skip to the names that interest you. In the video on the 6th of October, I said that EURCHF is biased to the upside. Well, this week, EURCHF broke below the support trend line, so a bearish outlook is now confirmed. The textbook target is at 0.9069. Now, there will be corrective rebounds going forward after pattern completions. These are common, but seeing how price action failed to break above and or into the cloud, I believe the resistances is pretty strong for EURCHF. The upside bias is lacking. I will expect rebounds to end in rejections to lead EURCHF lower going forward. I have been noting on Microsoft's bearish potential for some time now. I last touched on this name in a video on the 22nd of September in which I said that it is forming a head and shoulders top bearish pattern. Since then, we can see that price action has fallen into the cloud, and this has formed the second shoulder of this bearish pattern. A clear close below the cloud will increase Microsoft's downside bias, and the bearish pattern will be complete once there is a close below 388.06. The textbook target is at 308.92. Watch out for the supports at 350.64 as well as 365.80 that can bounce Microsoft higher when tested. When I first covered the US government bond 10-year yield, I said that the Federal Reserve will be cutting interest rates, but the chart is telling us that the 10-year yield is expected to rise, and it has risen. So I don't know what is going on. Despite the Fed cutting rates, interest rates are still rising. In the last video on the 29th of September, I noted that the next resistance for the 10-year yield is at the 4% psychological resistance. Now this was broken early this week, and since then price action has closed above the Ichimoku cloud, giving this its upside bias. It remains on track towards the textbook target at 4.3. That means further upside to go for the US 10-year yield. There will be two new coverage in this video. I'm starting the new coverage with Costco, a major consumer staple in the US. I suspect that it is forming a rising wedge, a bearish pattern. This suggests that Costco has bearish potential. But just to be clear, at this juncture, at this very moment, Costco is still bullish. Seeing how price action still trades generally higher, it's still trading above the Ichimoku cloud, so there's no reason for us to turn bearish on Costco just yet. Of course, if there is a breakdown below the support trend line, then the bearish outlook is confirmed. It suggests a potential drop of about $122.64, but for all we know, Costco may just fall and bounce off the cloud and or the support trend line to go higher. Now, this rising wedge still has some way to go before the expected breakdown. The textbook suggests that breakdown should happen 70 to 80% into the wedge, so we might get a breakdown closer towards December or maybe even January. Of course, I will welcome an early breakdown to get this bearish pattern resolved. And if you were to stretch the chart a little further back, I would argue that it is not easy for Costco to turn bearish since having an uptrend for some time. And every time it drops, you can see that price action just bounces off around the cloud support or just slightly below the cloud support for several times now. So in order to be absolutely sure that Costco has turned bearish, we need a close below the support trend line. I would not turn bearish on Costco right now. The next new coverage is on Visa, an international payment giant. It may be forming a bearish pattern, a double top, but as always, more validation is required. We need to see at least a weekly close below the 20-week simple moving average. Of course, better still, a weekly close within the Ichimoku cloud region to gain more conviction that Visa indeed has bearish intent. A weekly close below the neckline at 252.7 will complete this bearish pattern. The textbook target is at 214.66. Of course, if Visa bounces, and it looks like it has bounced off the 20-week simple moving average and as well as off the Ichimoku cloud 2 weeks ago, if it bounces, then this bearish pattern will be under threat. It will be invalid if there is a weekly close above the 290 level. Moving on to the next segment, I'll be seizing coverage on 4 names, either because they have met their targets or they have failed to perform as expected. The first name is on Wells Fargo. In the video on the 8th of September, I said that Wells Fargo has begun its bearish resumption towards the textbook target of 49.34. Now, that did occur, the decline did occur, but price action fell sharply for the next 2 days, but did not reach the textbook target. It only fell to a low of 50.22 before rebounding. So I believe Wells Fargo has met about 87% of its target, considering the low over here at 50.15 versus the textbook target at 49.34. This is actually quite a good movement for Wells Fargo, but simply because Wells Fargo has rebounded and has not met its textbook target, it has closed above the cloud, and I believe it is near invalidating its head and shoulders top. So I will be seizing coverage on this name, and I just want to note that 2 points. One, price action currently is excessively above the upper Bollinger, and number 2, there is a gap up in the latest price action 11th of October. So both of these points are telling me that to expect the next move for Wells Fargo to be down, at least to fill up the gap up before rebounding, before moving higher thereafter. I will also no longer be covering Aussie Kiwi. This cup and handle top, a bearish pattern, was completed in late August, but price action simply did not perform as expected, and it has since rebounded. And 3 days ago, this cup and handle top pattern was invalidated via a close above 1.1057. The next name that I will no longer be covering going forward is Adobe, because the head and shoulders bottom, which was completed on the 12th of September, is no longer valid. It was invalidated via a breakdown below the 500 mark this week, lower than the second shoulder bottom. The last name for this video is on Barclays. I highlighted to take caution on Barclays because it may be forming a bearish pattern at head and shoulders top. Price action moved below the cloud, giving it a slight downside tilt, but then it has rebounded since. And we can see that in recent weeks, declines were bounced off the Ichimoku cloud to resume the upside, and has since closed below the last high of the second shoulder, therefore invalidating this head and shoulders top. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.